Okay, let me see if I can get this to work right. This is Opto, and this is Guy Michael Green. This is episode 152 of this podcast. I'll put a link in the description. This is Peter Thiel's finance guy, and he's going to talk about the macro environment. And let me just play that.
They say, we've never had a situation where a country has contemplated recovery from a pandemic or entering into a Cold War type framework and decided that the solution to do that was to radically raise their cost of borrowing, dramatically increase their fiscal transfers to the rest of the world of US dollars by raising interest rates on our bonds. This is one of the stranger things I've ever seen in political history, and I guess I would label it theater. And I'm still left kind of scratching my head going, it's possible I don't understand the game in total, but I really don't understand why we're deciding to engage in what I would perceive to be very much an own goal, right? Scoring on ourselves.
I think he said everything in a nutshell there. I'm going to put my 2 cents in on this whole Fed craziness. I just watched a great podcast about peak oil. And peak oil means we've taken out of the earth all of the cheap oil, high-grade oil there is, and now we're going to head on a downward slope where it's going to be more and more expensive to get oil, and there's going to be less oil and so forth. Now, the ultimate output from that function is GDP is going to stop growing, according to the experts I just saw.
So from your perspective, Art, what is peak oil and why is it important?
And I've been in the oil business now for over 40 years. And what I see is that this business has gotten increasingly complex, just like all other human systems. And what that has meant is that oil is harder to find. And when we do find it, it is much more complicated or complex. They're not the same thing, but I think you know the difference to produce. And of course, that has implications for cost. I keep coming back to the same conclusion, which is it's not really changing. And then the subject we're going to dive into once we get through with the peak oil part is the issue of oil quality. And so much of what we call oil today is just not even oil. So I'm just going to leave it there. That's the concern that I have.
Well, let me define peak oil then very simplistically, that humans extract energy, fossil energy in this case, and we expand the scale of that, and eventually we will hit a maximum of the amount that we extract from the earth. And then from that point forward, there will be less, either a little bit less or gradually accelerating to more, or a sharp decline, or some amount less. And the reason it's important is energy underpins our economy, and oil, liquid at room temperature, incredibly dense, very cheap, used for our global transportation system, is the master energy resource. So once it peaks and starts to decline, we still have plenty of oil, and a climate change activist would say too much oil. But what we don't have is the enough to continue economic growth at the level required to pay back and maintain our existing financial claims. So peak oil to me always meant an inflection point of the growth and the monetary and currency system. But here's, okay, I'm going to tell you why I don't like the concept peak oil, but maybe if you want to opine on that first, what problems do you have with that concept? I mean, the oil drum was 15 years ago, and here we are, and there were a lot of people that were clamoring that 2008 was the peak and then we would be in perpetual decline, but here we're not. So do you want to say what problems you have with peak oil briefly?
Sure. So the problem that I see with peak oil is that we very quickly, and I was engaged in it, even before we met, is that we got involved with trying to predict the peak without really worrying about any of the underlying causes or reasons that we were even talking about a peak. And everybody got, obsessed with, well, it will be 2008, or was it 2005, or is it going to be 2012? And to me, that's where every movement, if you will, falls apart. It forgets why it started. And so
we're going to move into with zero oil. By the way, this is very bullish for Lordstown Motors and other BEV manufacturers. So we're going to move into zero oil, peak oil. That means zero GDP growth, possibly GDP, negative GDP, I'm not sure, but certainly zero GDP growth. And this is in the intermediate long term. And what that's going to do is it's going to lock a lot of things in. This is what my estimation of what the Federal Reserve is doing. The Federal Reserve are bankers. The Federal Reserve operate for bankers. The main bankers all go and they consult with all the big investment bankers on Wall Street before they make decisions. The bankers lobby the Federal Reserve. And I'm just going to say, it's in my opinion that the never-ending interest rates and the high interest rate cadence that the Fed is on, which this gentleman, Peter Thiel's finance guy, says, investment guy says doesn't make any sense. I agree it doesn't make any sense. But if you look at it from the viewpoint of the bankers, they have loans out, they have credit card debt out, they have mortgage debt out, they have other debt out that's has a variable rate on it, which is based on the prime interest rate. With inflation, unless the interest rate goes up, all those debts are going to be paid back with cheaper dollars than they were lent at. And it's my opinion that the Fed is going to guarantee for these banks that that interest rate is going to be up so that they get paid back in dollars of the same value as the dollars that were lent out on those loans, or even higher. So I think the Fed really, what it's doing is protecting the variable interest rate loans that are outstanding by these major banking interests. And by increasing the Fed rate, that automatically increases the rate on these loans. And again, it keeps them current. In other words, with inflated dollars, you're actually paying back that loan with cheaper dollars. By raising the interest rate, the loans are paid back with the dollar value that they were lent out at. And that's kind of confusing, but that's my take. I really think this is what the Fed is doing. If this is the case, we're not going to see a pivot. We're going to see a small pivot, until the economy is destroyed. Now, I had said in a previous video that the Fed would pivot in Q1 of 2023, and we are in Q1 of 2023. Let's see what happens. This gentleman mentions later in this podcast that if there's a catastrophe, the Fed will react in that case. So I think the only way we're going to get a shift in interest rates is with a catastrophe, and the Fed reacting to that. Is that going to be a military conflict? Is that going to be an invasion of an island nation by another nation? Is that going to be what? We don't know. But that's my 2 cents. I thought this was very interesting, and I wanted to share this with you guys. Hi, MXUX here. This is a interesting chart on peak oil. I think this topic of peak oil is being overlooked by the general press, but it's such a intermediate to long term thing, and it's such a large planetary macro thing. I think people are not interested. I think Elon Musk is probably very aware of this. This is a great chart. It shows all the horrible things that are going to happen after peak oil. And just real quickly to define peak oil, it means we've exhausted all the easy to get high quality oil on the planet. And we're going to move into an era where it's more expensive to pull out lower quality, lower BTU concentrated oil. And now this can be changed by new technology or fracking was one new technology, or synthetic fuels or other things. The podcast I quoted said that the only thing that solar and wind can do is generate electric power. So I think the point is we need petroleum products. Plastics are made from petroleum and so forth, and lubricants, and there are some vehicles and some vehicle types that just aren't going to be able to be electrified, and so on and so forth. But in general, reaching peak oil, it's a critical thing. Our entire planetary economy is based on it. Our GDP is based on it. If we reach peak oil, and these two guys on this podcast were brilliant, 40% of the stuff we count as oil right now isn't even oil. So we're pretty much at peak oil. I mean, no one has defined the exact date. They mention here, what's this, 2005. In 2025, they say unemployment and recession. That's where we are now on the horrors chart. Any case, let's just talk about in an investment model what this means. And I think this is something they might be talking about at Davos, for example, this kind of big picture thing. Index investing and passive investing, probably not going to work, because GDP is going to be flat to negative. Costs are going to go up and so forth. So you're going to have to be in this environment whenever it comes to be. You're going to have to be a stock picker, and you're going to have to pick efficient, profitable companies that are supplying, needed items to the public. Now, I think one company that comes to mind that does not fit the peak oil scenario is Amazon. And Amazon hardly limits there's going to be a simplicity to life, they say, after peak oil, because people are going to buy less, because everything you buy has an energy component. So, and it's an oil component right now. So as oil prices go up, all these prices are going to go up. So a company like Amazon, plus their delivery costs and so on and so forth and on and on and on, they're not in a good spot. A company like Tesla, that's taking advantage of electricity and generating and storing electricity, although this is not going to replace oil. Positive side, I think Lordstown Motors, working with Foxconn to develop battery electric vehicles. Again, Tesla's number one competitor, in my opinion. Lordstown Motors is a standalone company supplying fleet vehicles, battery electric fleet vehicles. Absolutely a good investment. But this whole concept of peak oil is either here or approaching, and it is going to change the economy, and it's also going to limit GDP growth, or actually turn GDP growth negative. And this is, recession. And this may be the rationale for the Fed keeping interest rates high. I had mentioned in another part of this video, or it's going to be in another video, that the Fed's working for the bankers, and what they're doing is they're raising interest rates so that all the debt that's out there that's under an adjustable interest rate, credit cards, some homes, and so on and so forth, mortgages and so forth, and other loans, I'm sure. The banks that hold these loans, they're demanding higher interest rates because of inflation. The dollars are worth less now than they were when these loans were let out. And these banks are saying, look, we want the interest rate up. Since these dollars are worth less, we want more of them to pay for this debt. So they want equivalent dollars covering this debt. And I really do think that's what the Fed's doing. I think we're all the victims of a monstrous hoax. I don't think the Fed has any interest in stabilizing the economy or employment or anything else. I think they're bankers. Bankers lobby them. They work for bankers. The bankers organize the Fed. And I think the bankers at the Fed are protecting the bankers worldwide in the economy with these interest rate hikes. And it certainly is a way of guaranteeing that these debts will be paid back in equivalent dollars. So anyway, this is peak oil. Interesting topic. I think it bodes well for alternative fuels. Also, oddly, for the oil industry, and you'd have to do your research on that and pick and choose where that would fit in. And consumerism is going to suffer under this, according to the experts. And a simplification in life and an investing strategy of picking efficient, profitable companies that meet consumer needs. Versus passive investing or long-term investing, or all of these sorts of things are out the window. I believe that's what it's stating. Anyway, you guys can do your own research on this. This is an interesting chart. You should pause it and take a look at it. But be aware that peak oil is a thing, and it's going to affect everything at some point. And again, this could be intermediate, long-term. Nobody really knows when we're going to hit peak oil. These guys that I quote in this podcast say we're already counting 40% of what we're counting as oil is in oil. And because of that, we're really pretty much at peak oil or close to it. Okay, so this is MXUX.